If you've ever dreamed of owning a home but felt overwhelmed by the thought of buying a fixer-upper, you're in the right place. Today we're diving into an exciting topic: should you buy a home that needs a little TLC with a VA home loan? Imagine transforming a house into your dream home tailored just for you, all while leveraging the incredible benefits of a VA home loan. Yes, it's possible, and today I'll show you how. Whether you're a first-time home buyer or looking to upgrade, the VA loan is an amazing tool that can make home ownership a reality. So stick around as we explore the ins and outs of the VA renovation loan, weigh the pros and cons, and uncover an amazing alternative financing option that can save you tons of money. So let's get started down this journey of home ownership. So the first thing that you need to do is to determine the condition of a home at your initial, not even the inspection, but as you're going through the property to see like how much work does it actually need? Does it need work to, let's just say, update a couple things, or does it need to be stripped down to the bones and redone completely? Because it's gonna obviously drive those options for you. Now, one of the things that you're gonna do, or you should be doing ahead of time, especially if you're planning on doing any type of work, is consult with a contractor unless you already know how to do the work yourself. Because we had a lot of times clients, go under contract, they do a home inspection, they find a ton of things that are wrong with the property. They get a contractor to come out and they're like, you know what, this project is too big. Because you do have to think about some of the factors that go into this, right? Let's say a market value, for example, is $300,000 on a property that you want to purchase. And you're buying it at $300,000. It is worth $300,000, but then you have to put an additional $25,000, $30,000 into the property. That kind of gives you upside down equity in the property. Normally you'd buy a property at a discount and then do the renovation work to the property. So keep those things in mind. It's better to know what needs to be done before you make the offer. So having some experience or someone walk you through it, or like a DIY doing research on YouTube. And then you can know, okay, this is what I should be looking out for. Because once you go under contract, you have a home inspection. Then you could bring a contractor out with you to kind of point those things out. Now, there's some key areas you should be focusing on. This only names a few. There's a lot more. Structural integrity is an important one. Plumbing, electrical systems, roofing, and foundation. That's where we see a lot of issues, especially with older homes, because they just have outdated systems. Now, the first part is going to be the condition of the home at the initial inspection, right? The second part is going to be the VA appraisal requirements. Now, this is where a lot of misconceptions happen, both from buyer's agents, seller's agents, sellers, and buyers alike. Now, we've done videos specifically just for this, so check out the channel, hit the like and subscribe button, and then you'll be able to see some additional requirements. But basically, the VA has what's called a minimum property requirement, the MPRs, right? These standards determine if the property meets the standards for the VA. And if it doesn't, then they're going to note on the appraisal that there are some subject to requirements in order for the VA to purchase that property. Keep in mind that you're getting 100% financing for a lot of veterans that are out there, right? So the home really does need to be in perfect condition, because in the event that there's a foreclosure, the VA would just keep losing more and more money. Obviously, we don't want that to happen. And if you do go down that route where you're not able to make payments, make sure you reach out to the VA, because they are actually a great resource for this with the regional loan centers. Now, I'm going to drop a link down below to the VA handbook that talks about the minimum property requirements. And I'll tell you that most of the time, it is pretty simple fixes, if they come up, that need to get done. Typically, it's going to be peeling paint, railing going downstairs, maybe some issues with the garage because it might be a little dilapidated, but really that's pretty much the main thing. Sometimes if you have decks and peeling paint, again, they're going to kind of be sticklers about that. But if it's done after 1978, that's when the lead paint testing was, that's when they stopped using lead in homes. You typically can get a waiver for those. So keep that in mind while you go down that journey. Now, the MPRs, right, the minimum property requirements, do have a lot of things in there. So don't get overwhelmed. But I'm going to note a few things that they're looking for, right? They're going to have space requirements, encroachments, drainage, special flood hazard areas, zoning, utilities. This is all the things they're looking for, right? Water supply and sanitary facilities, any kind of defective conditions, mechanical systems, and heating, to name a few. Now, the thing is, the VA does not require air conditioning in a property, so keep that in mind, because when I bought my place, I didn't have air conditioning, and I had to get air conditioning recently installed because the weather has been somewhat brutal. All right, so now let's move on to VA renovation loans. And I'm going to give you kind of a very high level overview of this because it is very lender specific. The VA doesn't really have a robust, like, hey, this is how it works. It is very lender specific. So do your research online and see what lenders have and compare them, because there's definitely some pros and cons to these products, which we're going to go over. Now, from my research, what most lenders, if they offer them, and I'm explaining why if they offer them, because there's a lot of things that go with it. So normally they offer a max of $50,000 for renovation costs. There's technically no limit, so you can find lenders that will allow you to do a lot more than that. Typically, there's a couple things that go with that. Out of that $50,000, $10,000 of it goes towards fees and reserves. So you really have like $40,000 to play with. And then the unlimited piece is very limited on the amount of lenders that do them, because typically they want the work to be completed within a 4 to 6 month period. So if you have really big, extensive projects, it can take much longer. And remember, you can do a VA construction loan and build a home from the ground up. So that might be a better option if the home just requires too much work. But it also depends on the area, because some areas, right, all the properties, there's no more land to be built on. So renovation loans really might be the way to do that. Now, if you had a good experience with doing a renovation loan, drop a comment below. And the reason I mention that is because we've had nothing but bad experiences with them, and then also just talking with people going through that. So let me explain why here in a second. So let's talk about some of the pros of using the renovation loan. One, obviously, is that there's no down payment requirement, so allowing you to finance all these costs within the loan, right? That's the ability to finance the property, right, the purchase of it, and the renovation costs. But there's a lot that goes behind that. So let's talk about some of the cons of using a renovation loan. So one is you're gonna have a longer closing process, because you need to get contractor plans, bids. They have to be done in a specific format. These contractors also have to be HUD approved. Then once you get all of that together and the costs, which can take sometimes weeks, then when you order the appraisal, you do have to give all of that information to the appraiser, and then the appraiser is doing the appraisal based on after cost repairs, right? So once all the work's been completed, what would be the appraised value? And this is a huge stickler, because you might be doing a lot of upgrades to the property that just won't give enough value to the property. So those are big challenges, because then you kind of have a back and forth, and that kind of leads to extended closing times, which can be 2 or 3 months. And depending on your market, if it's very competitive, you're just not going to be competitive in that because of how long that takes, because people normally will come in. You also have to compete against cash buyers, right? Do a conventional loan or a different type of loan, purchase the property, and then do alternative financing to do the renovations. But that really depends on how much work is needed to be done, which again, I'm gonna go over some of those alternative financing options that you have that a lot of people don't think about. The other piece to that is typically you're gonna have higher interest rates for those types of products, because they are higher risk products in just initially, right? We've seen plenty of people start renovation projects and then end up not finishing them, and then there's some foreclosures. So again, these are why those loan products have a higher cost associated with them. The other piece to that is that you do have to get a HUD consultant. So in a way, the government is controlling your money, once again, on what you can and can't do with it. So be careful with that, because we've seen too many things go awry because of that. Even the worst one I've seen is a contractor got paid $30,000 from the HUD consultant. They did no work and walked away. And that is more of a common story than I would like it to be. Now, let's talk about some of the benefits of just purchasing a property with a regular VA loan and then looking at those alternative financing options. Pros are, right, you can do what you want with the home, again, depending on how much money you need and what the value of the property is, because that's going to be the biggest decision maker of all of this. It makes your offer more competitive because you can close much faster. Remember, it takes about 21 days to close on a VA home loan, so it is extremely fast. Now, if you're working with the big banks, it's not going to happen, on top of being charged high closing costs. So just be really careful, shop around. You guys are interested, link down below to schedule a call with me. Happy to go through some options and see what's right for you. The other piece to that with the pros to that is that if there are some repairs required, which again are very minimal, you can do an escrow holdback. And I'll tell you my experience with this. And appraisals are all over the place on VA loans. I helped a buddy buy a place not too long ago. I saw the condition of the property and I'm like, there's no way that you're getting a VA home loan on this property because it's just completely outdated. It needs a lot of work, and the appraisal comes back and not a single issue. And I'm like, this is crazy. I buy a place, same thing. I'm like, man, this is going to be a total disaster. I know what I'm going into. I do this for a living, and not a single issue. But then we'll have properties were like, man, this is gonna be a perfect property, no issues with it, and then the appraiser comes back with something super small. So it's all over the place because it's dependent on the appraiser that's in the area. I will at least give it a shot because, again, if there are some issues with the property, typically could do an escrow holdback unless it's something real major like, hey, the roof is caving in. Well, no, you're not going to be able to do anything with that, okay? Now, some of that which is the con, right? If there's enough work that's needed, you're just going to be delaying the whole process. This is why, when we talked about in the beginning, is you really need to understand what the VA is requiring from the property to meet it. Now, let's talk about alternative financing options. This, I feel, is like where it's at, okay? Just because it allows you full control. Because remember, you can't do the work yourself. If you get a renovation loan, you have to hire a contractor, and that they're not, they don't disperse the money without that HUD consultant. So you're not just getting money. So this is why it's important to know these options. Now, if this first option applies, if you currently have a property, you can always get a home equity line of credit on it. I always recommend getting a HELOC, home equity line of credit, no matter what. If you currently own a property, max that puppy out and then just leave it there. Don't take a loan against it. There's tons of variables that go into these HELOCs. I'll definitely be doing a video not too long from now about comparing them, what to look for on these HELOCs, or maybe like a HE loan, a fixed second mortgage. But it is a great option to use if you're keeping that property, to use it on purchasing your next property. And the other option is if you buy a home, you could then get a HELOC on that property to do renovation loans, right? Advantages of that is, again, you could do the work yourself. The downside is that you do have to make sure you budget enough that and the work that you're trying to do is going to make sense with these HELOCs. So that is a big factor into that. Rates are going to be typically higher. The other option is using personal loans and credit cards. Now, this makes sense if you're doing more smaller renovation projects, right? There's a lot of 0% interest credit cards that are out there. Make sure you read all the terms. I've seen them anywhere from 15 months to 24 months of no interest. So if you're doing a smaller project and you need to get some work done, again, this is a great option. And for the people that are out there looking to do renovation loans, make sure you compare, or renovations, make sure you compare contractor costs And also you're looking online for various options when it comes to purchasing appliances. Like if you don't know, the PX now is partnered with Home Depot, and now you can do free delivery from what I've seen, right, recently. And also you're not paying property tax, not property taxes. You're not paying sales tax for that. So huge benefit. Same thing with like kitchens. People think like, oh man, they're crazy expensive. Shop around, and actually you can order kitchens online that are already prefab, pre-done. Like that's what we're doing, and the kitchens are amazing. So do your work, do your homework, and find out. And I did mention one thing by accident with property taxes, but I want to bring that back in the picture. So with property taxes, remember, you search your county and state for requirements if you qualify for a property tax break. Because those vary widely. We did a video on it not too long ago on how to actually search for those ratings on the different states and counties. Gave a couple examples, so check out the video. Another option, which is one of the cheapest options, is getting a 401k loan. So if you have a 401k, you could take a loan out against it and pay yourself back. Typically, the rates on those are pretty good. They're not too much because it's your own money that you're borrowing and you're paying back in. But again, it's just going to depend on the cost. You need $300,000. Okay, that gets a little bit different, right? Then you're probably looking at doing a full renovation loan. But if you need a lot less than that, kind of go through those options and what makes sense. Now, there's also alternative financing options to a VA renovation loan, like a FHA 203k loan. Home style, choice renovation, those are conventional products. And then you have portfolio renovation loans, right? Now, portfolio renovation loans can be a key to a lot of things that you want to do in life with real estate. And I'm going to do a whole video on investment properties with VA home loans, because this subject alone is probably about like an hour's worth to explain the dynamics of it. But portfolio loans for renovation loans vary widely in what they can and can't do. They can be used for primary residence, second home, investment property. You can use it if you have enough cash, right? Do a renovation and then refinance it into a VA loan. And if you have 25% equity, 25% equity, you can actually use none of your entitlement, which is crazy. And it's also pretty cool that you can do that. So keep that in mind. And just to kind of close things out, appreciate you guys watching the whole video. Make sure you guys hit the like and subscribe button. If you have any questions, please drop them down below. If you have video ideas, drop them down below. Always happy to help the veteran community. I'll catch you guys soon.